I think we're going to get started here, Carl, with Chris Winfrey as well, if you guys don't mind, because we are live from Liberty Media's Investor Day, of course, as you know, here in New York. The company announcing, by the way, Charter Communications, that was yesterday, is going to acquire Liberty Broadband, an all-stock transaction. Charter CEO Chris Winfrey joins me now. We can talk about that, but, you know, and nice to have you.
Good to be back.
Let's start off, you know, a year ago, you were fresh off sort of the Disney deal, where they included Disney Plus, and you've subsequently done many of these new carriage arrangements that include the direct-to-consumer platform of said company. Are you sort of done, and what are you seeing in terms of your hopes and dreams when it comes to video customers turning off your service?
I think we're just beginning. Now, we've gotten through the deal portion. In just over a year, we've completed all that. So not all of it's launched yet, but our customers will receive Peacock Plus for free, Paramount Plus for free, Disney Plus, ESPN Flagship when it launches. You know, I'm forgetting a bunch of other VIX. You know, if you go down.
What about Max?
Max, of course, the really industry-leading deal that David Zaslav and that team put together. So Max, including HBO, is going to go for free to all of our customers. So we have those contractual deals. We're launching those programmer apps. We have the ability for them to upgrade for free, which we'll be launching a little bit later this year, to add free services for additional charge. But all the ad-supported programmer apps are coming in for free. Beginning of next year, we'll put that all in a single spot so customers can find it, easily activate it. So we have the economic deals done, but we need to do some additional work to make it more customer-friendly. We are seeing good take-up so far, even though it's not the easiest to find and everybody's got different passwords. But once we solve those issues, really at the beginning of
But it's going to be a little while, it sounds like.
It's going to be a little while, but
sort of...
you know, when you think about the economic value, it's fantastic. Right now, already, it's nearly $80 of programmer retail app value that's included in our service for free to customers and effectively free to us as well. And so it really creates value back in the video product and allows us to get behind it, to market it, to push it, to attach it to broadband, which if you remember, we were on the verge of exiting the video business fully, and we meant it.
I know you did. No, because, listen, you forged a new path, Chris, to a certain extent with the dispute with Disney, which we followed closely, but you came out of it with this plan that you've now rolled out. So this is the new video cable, so to speak.
And in fairness, the programmers, for the most part, have gotten behind it. I think they realize that the most value to the consumer and the most value to them really does come through this type of hybrid linear approach in the marketplace. And I think you're going to see them really get behind it, not just from a deal perspective, but marketing and helping us make it easier for customers to navigate the space. And so we had a lack of value in the product, which we've solved, and it'll get rolled out, and utility. And utility was through Xumo. I know you have Xumo boxes.
I do. I still have them, yes.
The ability to have unified search and discovery really solves a customer problem right now, whether you take our video service or not. And the ability to have all of your content in a single place with a voice remote with your parent company, Comcast, that we adopted into Xumo, which we own together with them, is really market leading.
So your expectation is, I would assume, that it may help in terms of the continued erosion of video subscribers.
Where it matters for broadband customers to have video and where they see value, we want to have that. And so there's tremendous value in the video product for those customers who are going to value the service that we provide. That doesn't mean that we'll grow video again.
No, nobody's expecting
that. I'm not predicting that. But we can be proud of the video product that we sell and proud of the price that we put on the bill because the customer is getting value for it. It's something that they value. And I think that's better for everybody in the ecosystem because it preserves really the best product and the best value in the market.
Yeah. When it comes to growth, though, the focus of your company is not on video, where nobody expects you to grow, but on broadband.
Correct.
Where there is continued hope that at least you will grow organically. Now, obviously, you've been hit by the Affordable Connectivity Program. That seems to be running off at this point. So is your broadband business growing organically when we set the ACP aside?
You know, in the third quarter, which has some positive seasonality in it, if you eliminated the ACP, we actually grew. Now, Q4 is less seasonal, and so I'm not going to get into short-term predictions, but our view is that with ACP fully behind us, which it will be after the fourth quarter, and with cell phone internet as a competitor, its level of net adds slowing down slightly, I think we expect to return to a healthy rate of growth for broadband, using the investments that we're making in broadband, but also a better use of our mobile and our video products in a way that our competitors really can't.
Is that growth, though, only a function of the money you're spending to hook up new areas, so to speak? You know, is it from the capital investments in rural or expanding your footprint, or is it actually organic growth from what exists already?
Certainly the rural expansion and investment that we're making there gives us some tailwind for additional growth. But I think even inside of our existing footprint, we have the ability to, maintain or grow that footprint.
The ability to. It doesn't mean you will, though.
I think we will.
Why?
Why? Because, we've got a product that nobody else can replicate. If you think about it today, we have a gigabit service everywhere we operate. We don't redline. We don't do it in wealthy neighborhoods. We do it everywhere we operate. And we're upgrading that to be symmetrical and multi-gig speed everywhere. But that's not how you use your internet. You use your internet with wireless. Right? How many times are you in there connecting to the back of the modem? That's really not the case.
No.
And no other operator inside of our footprint, Comcast has it, but it's not our footprint, has the ability to combine wireline and mobile everywhere they operate. And so seamless connectivity, convergence, everybody's talking about the importance of wireline networks. Everybody's talking about the value of convergence. But there's only one company who can do that inside of our footprint, where you have wireline and wireless everywhere you operate. So if you take multi-gig wireline combined with Wi-Fi, combined with 5G radios, which are our backup radio, it's the slowest portion of our network, 87% of the mobile traffic is going over our wireline and Wi-Fi network. And so that's something our competitors can't have. And then we price it in a way, it's $30 per line.
Well, you're talking here about the bundled offering that you make.
Well, even without, if you have internet, you can attach the first mobile line for free for the first year, and then it's $30 thereafter. And that's a retail rate. That's not a gimmick.
Right.
So we save customers hundreds and thousands of dollars, which is, with an essentially much better product, faster product, more reliable.
But you've also had some price increases overall for broadband, have you not?
Small price increases. I
know I'm a customer in a lot of places.
If you take a look over time, so of course you can do the dollar per gigabit, which has gone down dramatically over time in terms of what's gone into your home. But if you take a look at our what's called ARPU growth, the revenue per customer, it's growing at 1-2% in a marketplace that's had much higher inflation. And so I think the ability for us to have revenue growth on internet comes with some modest, price increases over time, but really through the ability to grow broadband
you and
units.
Sorry to cut you off.
Yeah,
but you and I have talked about fixed wireless. I mean, 8 million people, I think it is, over the last 3 years have chosen to go with it, despite it being an inferior product, Chris. I mean, it seems like it is a real competitive threat.
Look, at the beginning, we probably underestimated the fact that there is a niche portion of the population that has a need for less speed, less reliability, and a perceived lower price. And so I'll take you the hit on the first two, but I think the third one, the reality is people think they're saving money. The only way that you can get cell phone internet or fixed wireless access is if you overpay for a mobile line, $60, $70 per line. And so I challenge any customer who's taking cell phone internet who thinks they're saving money to go take a look at their bill. I guarantee you're paying close to $200 for a 2-line household, and you can get that product for $80 from us today. And even at retail rate, so after the promotional period, it would be, $140.
Again, you're coming back to that bundle. Is the MVNO with Verizon enough to sustain you for the future?
It's been very successful. I think we've got a strategic partnership with Verizon. They've been good partners. Nothing's ever perfect in life, but they've been good partners. It's a great network, and it exists and works well for us.
And finally, we have a new administration coming. There seems to be a lot of hope when it comes to antitrust.
Yes.
Do you believe there may be opportunities for Charter to be part of some consolidation, whether it is a merger of some kind with our parent company Comcast or with a T-Mobile or a Verizon? Is that something you think we're going to, that you may think about because it's possible?
There's a lot of rhetoric right now that the door is wide open for M&A. I don't think that's entirely true. I think in any administration in which we operate, you've got to think about your operating strategy tying into M&A, and that means it has to be good for customers, which means it also has to be good for your employees and good for your communities and good for shareholders. And at Charter, our operating strategy, invest in the network, provide the fastest products, save customers lots of money, invest in your own employees. We're 100% onshore in the U.S.
I know. I saw you say that in your congratulatory note.
Nobody else has done that. I think I tell our team we should have a Made in America stamp for us because it's true. And so we invest in that quality. It's not only good for shareholders, but it's also good because the government realizes we're good for the communities we serve. We're good to our employees. Minimum wage of $20 everywhere we operate. And that also ties into M&A over time. We don't have to do M&A. We're not dependent on it. But as you know, we've been successful. We acquired Time Warner Cable, Bright House, Bresnan, all in a Democratic administration. And so being a good operator is not only good for shareholders, but it's good for M&A. But I don't think that the door is just wide open for any type of M&A. I think there's that chatter out there. It's more than chatter. I think you need to be careful, and you need to be a good operator, and you need to be able to demonstrate that you're going to have value to consumers at the end of the day.
Chris, always appreciate your taking time. Thank you.
Good. It's great to be here.
Chris Winfrey, the CEO of Charter. Carl, back to you.